Are you worried about a stock market crash in 2021? Worried that the stock market run-up in 2020 was way overdone? Wondering how to prepare for a stock market crash? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. The S&P 500 is sitting near all-time highs right now, yet a global pandemic is still raging, and the US economy is still not functioning at 100%. So it's easy to look at that dichotomy and conclude that something's not right. However, the stock market is a forward-looking mechanism. It's discounting future earnings back to the present. And a lot of companies in the S&P 500 are large companies that haven't had their long-term earning power impacted that dramatically, not in the same way that small businesses have. Also, keep in mind that we're looking at unprecedented stimulus, a market-friendly incoming Treasury Secretary, a very accommodative Federal Reserve, and the rolling out of vaccines. That all said, the valuation of the S&P 500 itself does look a bit frothy in my opinion, and it's very possible that the market could correct rather severely at any point in time this year. So what am I doing to prepare for a stock market crash? Well, let me tell you all about it. So I'm going to answer this question using 5 points. And I think when you take these 5 points and apply them holistically, you'll be better prepared to deal with any kind of stock market volatility that'll come your way in 2021 or any other year. First, I'm buying individual stocks. And I assume by watching this channel, you're doing the same. The S&P 500 is a collection of approximately 500 stocks, representing approximately 500 large US companies. This index is supposed to be a representation of the US economy. The valuation of the S&P 500 itself is mostly useful when you're buying the index itself. Just the same as the valuation of stock in Coca-Cola doesn't have very much to do with the valuation of stock in Microsoft, the valuation of the entire market doesn't have very much to do with any one particular stock that you might be buying. Thus, I don't really concern myself with the broader market's valuation. I'm a businessman who invests in one business at a time. What matters to me is what a specific business looks like in terms of industry positioning, growth, debt, profit margins, its dividend payout to shareholders, competitive advantages, etc. Then I look at the price of the stock against what I think it's worth. What the S&P 500 is doing is pretty inconsequential to all of that. It'd be like worrying about the aggregate cost of all merchandise in a clothing store when you're only there to buy a single t-shirt. Second, I stick with blue chip stocks. I invest in and advocate investing in high-quality dividend growth stocks. These are world-class businesses that have proven long-term track records of business success with rising profit year in and year out over very long periods of time. And of course, I want to see some of that growing profit come back to me via growing dividends. Growing dividends are what I call the proof in the profit pudding. Don't tell me you're profitable, show me. Show me the money. These growing dividends keep management honest, and growing dividend income serves as an amazing source of passive income. It's the best form of passive income, as I discussed in a prior video. My third point is I only buy stock when I think it's undervalued. This provides a margin of safety, which is so important. If you pay $50 for a stock worth $40, you're setting yourself up for poor returns and taking more risk than you should. Furthermore, any kind of broader market volatility might impact that stock disproportionately because the cat might get out of the bag and move investors out of the stock. On the other hand, paying $30 for that same stock reduces your risk and sets you up for much better returns, not to mention a higher yield because price and yield are inversely correlated, all else equal. If there's a stampede for the exits, an undervalued stock might actually get capital as investors start to look for more safety in the face of a storm. My fourth point is, if a stock market crash does occur, that should be looked at as an opportunity. Short-term volatility is a long-term opportunity. When I see cheaper stocks, I'm giddy. I'm buying stocks every month anyway, so I'm much happier when the prices are lower. Being sad about stock market drops would be like being sad about walking into the grocery store for your usual grocery run and seeing everything you want to buy on sale. That'd be silly, right? Unless you're selling off stocks to pay for your lifestyle and retirement, you should be glad to see cheaper prices. Anyone actively accumulating stocks and building their wealth and passive income benefits from lower prices on high-quality stocks. Cheaper stocks should offer higher yield, reduced risk, and greater long-term total return potential. I can tell you for sure, I was picking up cheap stocks left and right in the spring and summer of 2020, and many of these stocks are already up more than 100% while paying me large and growing dividends all along the way. My fifth and final point, which might be the most important point of all, is to stop trying to time the market. As I just said, I'm buying stocks every month. I find deals in every market. Even in an expensive store, cheap merchandise can be found somewhere. I don't worry about what the market is doing, and I don't try to time it. I've never heard of anyone who can successfully do so, and even if you could, it won't make as big of a difference over the long term as you might think. Take Johnson & Johnson stock, for example, stock ticker J&J. Let's think back to Black Monday, which was October 19th, 1987. The Dow Jones Industrial Average dropped over 22% that day, which still ranks as the largest all-time single-day percentage drop in the Dow Jones. Let's assume you were prescient about Black Monday and you waited to buy J&J until after the carnage. J&J's total return from October 20th, 1987 to December 24th, 2020 comes in at 18.02% annualized, turning $1,000 into just under $245,000. What about the poor sap who bought J&J stock the week before Black Monday? Well, J&J's total return from 10/16/1987, that's October 16th, 1987 to December 24th, 2020, comes in at 17.59% annualized, turning $1,000 into a bit over $217,000. Sure, $245,000 is better than $217,000. Nobody's arguing that. But even the biggest single day drop in the Dow Jones didn't really mark that significant of a difference in the long-term total return of J&J stock. This speaks to the power of systematically investing in high-quality companies for the long haul and ignoring the noise. Time in the market matters more than timing the market for the long-term investor. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments how you're preparing for a potential stock market crash. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over at Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who've been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.